So welcome back everyone to another Finding Forex video. In today's video, we're going to be discussing everything related to Forex Factory. We're going to be going how to use it, what to use it for, can you use it to trade the news, can you use it to avoid trading the news, and we're going to be going all over that in today's video. So, without further ado, let's jump into it. Teamed up with Longhorn FX to give you guys the best broker. No doubt, if you are new, you don't want to invest too much money into Forex right now. You think you want to get a feel for the water, you want to test the water, and you want to see where it leads before you invest thousands and thousands of pounds of your hard-earned cash. This is where Longhorn FX really exceeds and goes above and beyond, because it can offer you up to 1 to 500 leverage on your accounts. That means if you only deposit £50, you have the leverage of a £50,000 account. Not only that, if you want to flip an account, this is the best way to do it. 1 to 500 leverage from taking £500 to £1,500. If you want to take £50 to £100,000 or £100 to £50,000, a 1 to 500 leverage is the way to go. They have MetaTrader 4, so you can trade straight from your mobile phone. They do CFD trading, they do stocks, they do shares, they do Forex. All of this in one nice, easy place. If you guys want to get an account with Longhorn FX, head over to the link down in the description. Now, before we do get into the thick of things, if you guys want to keep content like this coming, give me a reason to keep producing these sorts of content and these sorts of videos by showing me that you guys want to see more of them by subscribing to the channel and leaving a like on this video. And it really does help the channel out and it really does help me out. What we're going to first want to do is just load up the internet. Now, I'm doing mine on my laptop, but you can do it on a PC, iPad, iPhone, Android. As long as it pretty much connects to the internet and you have internet access, it doesn't really matter what you put on. So all you're going to want to do is put in Forex Factory. And then you want to put in economic calendar, okay? Because this is the most important part about Forex Factory that we're going to want to be using. We don't want to go onto the news or the UK. We just want to go onto the Forex Factory economic calendar. So we're going to type in the economic calendar. And it should be the first thing that comes up. Potentially there may be some ads ahead of it. If there are, just scroll down and just till you see calendar and then Forex Factory. So what we're going to want to do is click on this, and then it should bring you up to this website. And now this is where it starts to get a little bit more complicated, because you've got all of these dockets, you've got all of these numbers. It can be a bit confusing and overwhelming when you see all of this. So first of all, what we're going to want to do is we're going to go into the top right here where it says filter. We're going to want to go ahead and click that. Now, we've got 4 different types of dockets here, and you're going to have to bear with me for a little bit because this is the most boring part, but it is also the most important. Before we continue on with the video, are you subscribed? Have you liked? Have you commented? If you haven't, do it now. So first of all, what we have is the grey docket. Now, the grey docket indicates bank holidays, and depending on what currency you've got selected, which you can see down here on the right hand side under currencies, it will show all of the currencies that are undergoing a bank holiday. Next, we have the yellow docket. Okay, this is low impact news. Essentially, this is the sort of news that won't have really a huge effects on the market. They may cause a bit of volatility, but for the most part, yellow dockets don't really have an effect on the market. And then we've got orange docket. Okay, the orange docket is a slightly more medium impact event. So this will have slightly more of an impact than the yellow docket, but from what I found in my personal experience, this doesn't have a huge effect on the markets either, because sometimes it can come out and it can have a bit of volatility, but these two you don't really want to worry about too much, okay? So we're going to untick these because we don't really need to worry about these at all. Next, we have the red docket, okay? Now, the red docket is the most important docket in my opinion, because this is where all the high impact news events will happen, okay? If it's a high impact news event, you can guarantee that something big is going to go down, and it's potentially a big market mover. To give you some ideas of what would be on a red docket, would be unemployment rates, employment rates, interest rates, inflation rates. All of these things are considered high impact economic events, okay? That's why they're a red docket, because they are big market movers. And that's the only thing we want to concentrate on for now, okay? So we're going to apply our filter. So what we've done now is we've applied it to the bank holidays and to the high impact news events. The reason why we want to know when it's a bank holiday is because we can expect a bit more of a slower day in the market during that time. So if we take Monday the 19th of September, Great Britain had a bank holiday for the Queen's funeral. This means the London session wasn't open, as volatility was a bit lower as well. Okay, so normally on bank holidays, normally during the London sessions, when there's like an English bank holiday or a European bank holiday, the market tends to be a bit slower. And also the same goes for America. If it's an American bank holiday, the markets during the American session or the New York session tend to also be a bit slower. Before we continue on with the video, are you subscribed? Have you liked? Have you commented? If you haven't, do it now. So that's why we want to pretty much have those dockets on, okay? We want to have these dockets on because we know that it's going to be a bit slower during these times. Really, we only want to concentrate on the dockets that are going to have GBP and then the USD, because when it's a yen bank holiday, it doesn't really matter too much, to be honest. Okay, so now we've got all of our red dockets, okay? We've got all of our red dockets. These are the things that are going to move the markets the most. And we've got all of our grey dockets. And these are the things that are going to potentially not move the markets at all, because there'll be people off and there'll be banks off and there'll be institutions off during these times. So we've got these now, okay? So if we look down here, we've got the details, okay? So if we go onto something, so we've got the CPI news for the Canadian dollar. If we go onto this docket here, okay, this will pretty much give us an insight to what's going on behind the curtain, okay? So the source, and this is where it tells us the source, where does this information come from? It says the statistics, we got there eventually, of Canada, okay? And then it measures the change in the price of goods and services purchased by consumers. So this is measuring inflation. Usual effect, actual greater than forecast is good for a currency. Now, this may be a bit confusing because inflation is seen as a bad thing normally, but within trading and within the Forex market, it's actually seen as a positive thing. Now, I know on the stock market, it's also seen as a negative thing, but if you're trading Forex and you're looking at inflation rates for a company or for a currency, sorry, if it's coming out actual greater than forecast, it's good for the currency. Okay, we're not going to get onto too much like all the details of why it's good for the currency, because it can be a bit boring, and we do want to try and filter through this video to get all the knowledge and information out there. So the usual effect, actual greater than forecast, is good for the currency. This tells us the frequency, so this is released every month or once every month. The next release will be on the 19th of October. Okay, these are notes, okay, so this is just notes about what is going on with the CPI. So it says this is the most important inflation related news due to its earliness and broad scope. Among the few non-seasonally adjusted numbers reported on the calendar, its calculations most commonly reported. And then it says, why do traders care? So why do me and you care about inflation rates? And here it says, consumer prices account for the majority of the overall inflation. Inflation is important to a currency's valuation because rising prices lead to central banks raising interest rates out of respect for their inflation containment mandate. So basically, this simplified is pretty much, if inflation is rising, it will lead the central banks to raise interest rates to counter the inflation. So to bring the inflation down, they have to raise the interest rates and bring the interest rates up. Now, this is why it's seen as a good thing for the economy, because this will then force central banks to raise interest rates, and that is seen as a positive. Even though negatively, people like with houses and mortgages and taking out loans and stuff will be worse off, it's seen as a strong economy, and raised interest rates is generally a good thing for an economy or a currency. So this is what we've got here. And now the second most important thing is what we've got here, okay? And this is where you can actually trade the news live. This is where you can make some money from the news events that is going to happen. So if we look at the Canadian CPI, okay? So it says it's 0.1%. That's what the previous one was. The forecast one was 0.1% or minus 0.1%. So this means they're bringing inflation down, and it actually came out at 0.3%. Now, I know what you guys are thinking. Before we continue on with the video, are you subscribed? Have you liked? Have you commented? If you haven't, do it now. This is seen as a good thing for the consumer because inflation, the Canadians have successfully brought inflation down. However, if inflation is coming down, it means interest rates won't rise again, which leads investors to not want to put their money into the Canadian dollar because interest rates are staying stagnant or they're being lowered. Okay, now this is where you can make money, because if it's come out where it's negative, this will lead to the Canadian dollar actually being weaker. Now, if the Canadian dollar is weaker, this means that you can sell the Canadian dollar and catch the news event spike. This is excellent if you're a scalper because you can get those short, like 10 to 15 to 30 minute quick moves that only happen when the news drops. You catch the news spike, you get in, you get out, you make your money, and then you go to the shops.